All right, today we are back with Gareth Soloway, cheap market strategist for in the money stocks. And we're going to talk about crypto. We're going to talk about Bitcoin. We're going to talk about the stock markets and anything and everything else that comes up. So Gareth, it's been a couple of weeks. How you doing?
I'm doing really well, Greg. Thanks for having me back. Great to be here.
It is. And, it's funny because every time we do these, we always seem to have some price action to talk about. It seems like we get a little lull for a couple of weeks and then, we schedule an interview and bam, everything starts happening.
Sure does, man. It's been fun the last couple of weeks.
Yeah. So what's going on? What do you want to start with today?
Yeah, I think let's talk about cryptocurrency. I think that was really a remarkable collapse over the weekend, kind of Saturday night Eastern time into and if Friday into Saturday night or Saturday day. And it was just remarkable, honestly, but not entirely surprising. If, from our last interview, we talked about how the deleveraging event in the stock market, if it did happen, it could cause this type of drop. And that's really exactly what happened. We've seen the stock market start to decline pretty sharply, and that freaks out the crypto market. And then you see kind of a follow-on collapse as well.
Yeah, I think everybody now that we're questioning or, maybe even, the new thesis that, Bitcoin had decoupled from the stock market and crypto at large had decoupled from the stock market. I think, that thesis has been debunked now. I think we know that it absolutely is correlated, if not even hyper related to the stock market and traditional markets. The real question is, was this all like the Omicron variant and all that, or is this just the more deeper structural issues of the markets and the amount of leverage in the system? This is just the first catalyst to the great deleveraging and unwinding that we're about to see.
Yeah, I'm more in the second camp there, where I think this is just a tremor. This isn't. A lot of people would look at this and say this is huge, and we've seen down days 1% to 2% in the stock market, multiple ones. I think this is just a minor tremor before something bigger. You're starting to see the chatter from the Fed about tightening, tapering, all that kind of stuff. And again, notice the shift in the Fed, right? So, I think the last time we talked, Jerome Powell was still being very, very dovish. And all of a sudden, he's done a little bit of a 180. And I'd like to just point out to your viewers that what changed? And the answer is he got reappointed to the Fed by President Biden, who, by the way, has a midterm election next year. And a lot of his voters are middle income, lower income, who inflation really hurts, right? So all of a sudden, you've seen him kind of turn more to the hawkish side to try to get inflation under wraps. My guess, it's all tied together. And the market doesn't like it, right? The market wants that nonstop flow of money to just keep propping things up. And it doesn't look like, listen, inevitably, I think the Fed is still going to always be there, but they're not going to be there quite as much as they have been.
Yeah, that's interesting. And I wonder if and what they can do this go around. They have to let it deleverage. Wall Street and the banks have been the biggest beneficiaries of the monetary easing and the, current, monetary policy that we've been experiencing. Main Street was killed. And now inflation, he can't deny it because it's fundamentally changing the behavior of the consumer now. 2 months ago, not so much, but now with gas prices, with food, with rent, with the cost of healthcare, the cost of just everything that people are doing every day in our lives is at a point now where it's changing people's behaviors. He can no longer deny inflation, and I think at the last last meeting he tried to put that away as easily as he could, and as polished as he possibly could to say that we're not going to use that term anymore. Transitory.
Transitory is dead now. That's not even part of the equation. Yeah, I think it's remarkable how things change like that. And again, the markets are somewhat slow to react because even though we've fallen back off of the all-time highs, we're really not down that much. Markets are rallying today again. And I think you have to remember that there's still buy the dip mentality. So it hasn't soaked in fully to all investors. I think big investors are starting to recognize. They're always the first ones to recognize that, hey, we got to be a little bit more cautious here. The Fed's not going to bail us out. But, the small investor is still in that conditioned mode of buy the dip. And I'd also like to point something out. So, we always talk or you hear the talking heads talking about Omicron and how, why is this causing a sell-off in the market? We've had past Delta variants and so forth that didn't really cause a sell-off in the market. And I'll point this out, folks. So when we initially had COVID, right, and in March of 2020, you saw this big decline. The Fed came out with bazookas blazing with extra money. The government was printing. They were sending checks to the Americans, all Americans. And basically you had inflation at 2% or less. The reason why the market gets scared now with Omicron is because with 8% inflation, the Federal Reserve cannot come out with bazookas blazing. Again, their hands are tied. And that's why, I mean, if I would have no doubt that if the Fed was going to print as much money as they did prior, the markets wouldn't care about a new variant, even if it was more deadly, because the money would just flow into the system. But they can't do that anymore.
Yeah, and I think that was the signal he sent last week was start taking profits. Here's what we're going to have to do. Here's when we're going to do it. And I think the markets had already started a couple of weeks prior, understanding where we're at now. But here's the real question. We know you could probably draw down 30, 35%. No big deal. That's probably where we should be, arguably, anyways. Mm-hmm. All assets across the board should be about 30% less than where they are now, just because of what we've seen over the last year and a half from the Fed and their policies. What if it hits 50, 55, 60%? Do they jump in at that point, and what can they do?
Yeah. So in my opinion, absolutely they'll jump in again, right? So first of all, I think it's important to recognize that you've already seen a big decline in oil. You've already seen a big decline in natural gas, right? Natural gas has just fallen precipitously. So you're going to see certain metrics on inflation starting to come in. So the Fed can start to claim somewhat of a victory. But my issue is that you have this longer term, systemic inflation where it's more like the wages rising. That's the issue here, is that wages rising, when you go from $15 to $20 an hour or $10 to $20 an hour, there's no way any business can put through all of that cost on the consumer day one. So what they're going to do is they're going to kind of put it through 50 cents every 6 months. And that's going to keep that inflation kind of boiling over, even with commodity prices coming down in the short term. So I think that's something people have to kind of recognize, and it's something that you should pay attention to. So you're going to see the Fed claiming somewhat of a victory. I think you'll see the Biden administration saying, oh, we're bringing down inflation, but I don't think you're going to see inflation go back to 2%. I think 5% is probably where it settles.
Yeah. And there's a lot of data that they don't take in for that calculation anyway. So real inflation at the consumer level that's what's driving behavior. And those metrics, I think they're starting to become aware of. And, and I tell you the other thing, and I think you said it in some of your other interviews I've been watching the last couple of weeks, with the different shows you're on, 2018, is really the benchmark to be looking at. And what happened in 2018 when Powell said there isn't any inflation. So we're going to, go ahead and start tapering back. And we saw what happened with the markets, including real estate, 2018, 2019. And here we are now, where he is saying we do have a problem with inflation. They have to pull back. So, it's going to be interesting to see how far this correction goes.
Yeah, and that's one of the reasons why, since kind of like July or so, I've talked about the potential for Bitcoin to fall to 20,000. And my key metric on that was some sort of deleveraging event in the entire system, which again, you could arguably say maybe is starting here. This again is very minor if it is the start of it. But if you get a situation where the deleveraging occurs in the market, and let's say the stock market drops like what we were mentioning, 50% or so, it absolutely will trail through to cryptocurrency. And if you already saw a decline from 68,000 down to, I think the low over the weekend was like 42,000. I mean, imagine if the stock market declines, what's the stock market down 6% from the highs? Imagine if you're down 50%, what the impact on cryptocurrency could be, especially with all the leverage in cryptocurrency.
Yeah, well, that's, we saw that last March, right? Or March of 2020, Bitcoin is going to be, and cryptos, they're going to amplify what the markets are doing by, 3 or 4 times. And we know cryptocurrencies, altcoins, they'll draw down 80, 90%, whereas Bitcoin, if Bitcoin draws down 50, 60%, they'll draw down 80 or 90.
Absolutely.
The real question this time around, and it's really interesting too, in terms of people saying that we can never get back to certain levels, but we will definitely go to certain levels. It's really interesting, the psychology that's out there when it comes to Bitcoin. Like a lot of people said, we'd never see 60 again. We'd never see 50 again. We'd never see 40 again. And absolutely under no circumstances will you ever see 30 again, much less 20. But we're going to see 100. We're going to see 200. It's really interesting, that philosophy and that psychology. And nobody really knows, but what it looks like is there's no appetite above 69,000. Zero.
No. And in fact, if I show my chart of Bitcoin here, this is something that I think I might have even pointed out last time I was on, which is basically you had this break of the April highs, right? If I put a trend line in here, you can see here, you broke above these April highs for one day, just one day right here, and then one more day here, and then you quickly came back underneath. And to me, you had all these smaller investors screaming it was going to go to 100,000 by the end of October. Then I heard November. Now I'm hearing December. But when I look at this, I say, why couldn't it, with the sentiment as bullish as it was there, why didn't it break higher? And the answer is that you had big money selling into that. I mean, there's no other reason why, when you had so many small investors piling every last dollar into it, that it didn't go higher, other than you had bigger players selling into it. So I think people have to recognize that. And really now you have a significant double top. And I know people told me I was wrong when I said, hey, there's a 4-year cycle in Bitcoin, and everyone's like, oh, well, it's changed. It's not the same anymore. It's a different, but really at this stage, you still have to go with that until proven otherwise, right? I mean, that's what we look at on charts. We look at these kind of metrics from history to kind of develop what we know for the future.
Yeah, yeah. So let's talk about that for a second. So, the 4-year cycles are obviously, geared around the halvings, when Bitcoin supply gets cut in half, every 4 years in terms of the programming. So do you think the market is still going to revolve around that 4-year cycle, or do you think it's going to become more like, the stock market, where it's a steady thing and there really are no cycles, much less, like there's a thesis out there about lengthening cycles and, things like that.
Right. Yeah, I mean, that is such an amazingly tough question to answer. And the reason it's tough to answer is because if you look at the stock market from 2009 to 2021, where we are, you could say, okay, well, we really haven't had a long extended bear market, not since the 2008, 2009 period. But then you have to ask yourself, well, why? And the answer is because the Federal Reserve has manipulated the market, right? So the bigger question is does the Federal Reserve continue to manipulate, or does the market kind of overrule the Fed and the Fed stay away because of inflation? If the Fed stays away from because of inflation, then I think you go back much more to a 4-year cycle or even a 6-year cycle on the stock market. And you have to think again that cycle could hold true for crypto as well.
Yeah, that's interesting because, we haven't seen a bear market at all. I mean, we've seen some corrections here or there, but we haven't seen any kind of a sustained bear market in any of the markets, including real estate, since 08 and 09 when the Fed jumped in.
Yeah. Which to me, by the way, I mean, to me, that is so scary. I've always been someone, and maybe it's an economics background or whatever, but things are naturally supposed to occur, right? I mean, we rise in the morning, we go to sleep in the evening, we have cycles, everything's supposed to be kind of naturally occurring. And I've been a big advocate that if you just stayed off of the markets and you didn't manipulate with all this printing of money, you would have drawdowns, but they're generally just small drawdowns. Then you go up again, then you come back down, versus because the Fed gets involved, they cause these massive expansionary periods, which then are followed by these ugly collapses, which are much more painful than if you just let the market be the market. So, I mean, again, it's going to be so interesting. We're kind of entering this new phase where, how much influence does the Fed have over printing of money, or can they? And again, I think this is tricky because the Fed is going to get drawn in. If we have a drawdown in the stock market of 20, 30, 40%, at some point they are going to come in because unemployment is going to start to rise. And then their dual mandate comes into play. Well, which one is more important? Is getting inflation under control, or is getting people back to work under control more important? And that'll be something that's a real battle.
And that's interesting too. Will we even see an employment problem just because the markets are deleveraging? Because, arguably it's just a leverage issue. It's not a production issue.
Right.
It's production of money, it's liquidity, but it's not actual, it's not an economic issue. The economy overall is doing well. We're still producing, we're still consuming, there's still demand.
But do you think that so let's just say the stock market falls by 30% and doesn't recover in a couple months, like we've seen with COVID and so forth. Do you think people have gotten so accustomed to their 401ks and the wealth effect from the stock market that that's then contributed to the spending? And that if we have a drawdown that stays down for a longer period, do they start to say, wait a minute, I'm not getting wealthier constantly, so I don't feel like I can go out and spend as much money? I don't know.
Yeah, I see that. And then that'll potentially send people back to work that, otherwise retired early or, exited the workforce. So you'll see some of those people that were making money in stocks, making money in crypto, that all of a sudden now they have to go back to work. I was talking to one of my clients today earlier and said that exactly that. He said, hey, if my portfolio doesn't go where it's supposed to, and if it goes down in this environment, never comes back, I'll just go back to work. So, You know,
I think, I don't know if did I say that last time I was on, that I really truly believe that the Fed caused the labor shortage problem. And it's such a weird connection, but by the Fed printing all this money and causing the equity markets, the crypto markets to go up, it actually kept people out of the workforce, because now they didn't have to work. They could just buy SHIB or buy Dogecoin or buy stocks, and they could just sit back and say, oh, I'm a trader now. I'm an investor. I'm making more money in the markets than I ever did at my job. And so they really created this inflationary problem on multiple levels, because by having no workforce coming in, people have to raise the wages, and that then adds to inflation. I mean, it's just insane.
It's interesting. It's interesting times. And there was some articles out last couple of weeks over the number of people that have quit their jobs to trade crypto full time, because right now with the volatility and with, the returns, yeah, I mean, you can make a good income trading if you know what you're doing. And let's go back to your chart again real quick and just kind of, talk a little bit about direction and maybe some time frames.
Mm-hmm.
Obviously nobody knows anything. It could, Bitcoin's Bitcoin. It could do anything, right? It could go straight up, straight down. We could go sideways for 6 months. And, so one of the, there's a camp out there that says we've topped, we're done, the cycle's over, we're entering a bear market for Bitcoin. The good news there is now it's alt season. Altcoins are going to rip. They'll go through their little phase because the money's exiting Bitcoin. It'll now go into altcoins, although we've seen a lot of those ripping before this. So that little cycle is a little bit off. And, so now we could go into, more of a, downtrending market, try to find a bottom and just kind of range for a while back into, over to, when you look left, that pre to, 2020, 2021, where we had that long-term accumulation, phase in the charts, prior to the last, run up, even back, further from there. So that's, a lot of altcoins are actually right now approaching those July lows. Several of them have almost hit those July lows, but I'm talking, if you go back into 2020, September, where I kind of pegged the bull market as starting, in that 20,000 range around September, the the year prior to that was that long-term accumulation phase. We were starting our uptrend, I think, in, February of 2020 before the pandemic. And then we got, a little bit of a setback from the pandemic and then off to the races again after that. But I think the bull market was starting around January, February of 2020.
Yeah, I agree with you on that. Absolutely. And what's interesting about this chart is, so let me kind of caveat that. So, as investors know, I'm a shorter term investor. So I'm generally what I would classify as a swing trader, even though I'm very bullish long-term on Bitcoin. I still think the deleveraging will take it down before the next run to 100,000 and then 500,000. But I do want to make it clear. So I actually bought Bitcoin as a swing trade over the last couple of days. When it dipped on Friday night into Saturday, I actually picked it up, and I picked it up because of this support here. And then if you take this high and you connect it down right here, you can see that you actually pierced this short-term support right in this range as well. So I actually bought around 48,500. I started to accumulate a little bit. And so far I'm in the money a little bit. I'm looking for a short-term bounce back to about this level right here, this 52 to 53,000 level. So again, it's a very short-term trade, but I actually do think that you'll see a little bit more upside in the near term in cryptocurrency, especially if the stock market can kind of calm down for a few days, maybe going into year end. But I do want to be clear that once it achieves that area, I'm out until it drops more, because I do see more downside. The 40,000 level will be significant. Then after that, you have this big support right here at 30,000, which was that previous drop from the April high down to the low here in May, which again was 30,000. So, there's going to be bear markets, bull markets. There's lots of great trading opportunities. And as a swing trader, I'll be in and out. As a longer term investor, I'm still waiting for lower levels to accumulate kind of a buy and hold portfolio.
Yeah, it's interesting. And, whether or not we go into a long-term bear market after this is all, over and done, whenever this cycle ends, will be interesting to see if that actually happens. I'm not so sure it will with as much adoption as we have now. But, if the markets are, heading in that direction, then, crypto is going to follow. It's not going to decouple from the markets in that sense. But,
right. And the biggest thing, I think the biggest thing we can see recently is that fear and greed are still the most powerful forces. They've always been in any market, the most powerful forces. And so when you get this kind of fear in the stock market and it bleeds through into crypto, I mean, look, amazing drop from like 55,000 all the way down to that 42,000 range in just a very short amount of time. So, I mean, comparatively to the stock market, crypto, exemplifies the drop 10 times over almost.
Yeah, it's really interesting, and and that that'll pull a lot of new investors out of the market too. When something like that
Yeah.
happens, they're like, man, they'll throw their hands up and they're done.
Yeah.
So it's really interesting. But
And
I'm with
what,
you. I've been playing with some altcoins. I haven't been doing anything with Bitcoin, and I'm getting for every move that Bitcoin makes, altcoins, some of them are 2-3 times. So
yeah.
if you're jumping up to that 52,000 range, that's a good 20% on Bitcoin. That'll be 50 to 100% on some of the altcoins.
Yeah, absolutely. And you're right. One of the interesting things is like, if you look like like Cardano or something like that here, let me show my chart again. But like there are altcoins out there that arguably are in a bear market at this point. And not only that, but like a crypto winter. I mean, just looking at some of these, like here you have Cardano that just back in September was trading at $3. And, in the overnight, it went to $1.26. I mean, that's percentage wise massive. And I even Polkadot, which I've actually accumulated a little bit, Polkadot, same kind of thing. I mean, the high here, just going back to really the beginning of November, was above $54, almost 55. And it corrected down to 24. So you're talking about, I mean, these corrections are not minor corrections. I mean, they're 50+% drops in some of these in a very short amount of time. And I mean, as an investor, I'm kind of nibbling a little at some of these like you, but I mean, it's crazy. I mean, this volatility is out of control.
Yeah, you got to be careful with the altcoins because some of them are taking a huge beating. Sushi Swap, that's one of the ones that's down almost back to its July lows, or at least it was, at the bottom. And then there's other ones that are just popping back real quick. I mean, Avalanche is already up, 24% today. So, when you're looking at little swing trades, man, you can have a lot of fun with these altcoins. That's the kind of stuff I've been playing with, 20% here, 30% there in like a couple of hours. It's crazy.
Yeah. Yeah, you're absolutely right. It is amazing. Yeah. It's deadly or it's really profitable, one or the other.
Yeah, it's tricky. You gotta be careful and know which ones are in there and protect yourself. But it's kind of fun. It's interesting.
Yeah.
Yeah, cool. Well, Gareth, I appreciate you taking some time out today. I know you've got your new crypto service going on. Why don't you tell us about that a little real quick, and I'll put the link down below for your website so people can go check that out.
Oh, wonderful. Yeah. So I launched about just a little less than a month ago, verifiedinvestingcrypto.com. And it's basically all cryptocurrency trades. So we've traded Polkadot recently, Ether, we're in Bitcoin. So all these kind of ones that we've been talking about today, they're all swing trades. They're all based purely on charts, no momentum, no FOMO, no kind of, this is all technical, which there's actually a big market out there for people to kind of, they want the not emotional kind of basic chart levels on these cryptos. So that's what we're doing. Shorter term trades. We're in and out for 10 or 20% in a couple of days. That's the goal. And yeah, it's I appreciate you letting me mention it for sure.
Yeah, absolutely. Yeah, it looks like that's getting a lot of traction, and it seems like you're having a lot of success in there.
Yeah, it definitely is. People are definitely enjoying it. And I do a video every day, maybe sometimes two. And I really try to teach the technicals in the videos to give that added value.
Yeah, that's the key. A lot of people don't believe that technical analysis works with crypto or Bitcoin. And, what is technical analysis?
Yeah, I mean, it's basically just human emotion, right? So if you have, if human emotion is ruling charts, which is how charts are created, when a chart goes up, it's greed. When it drops sharply, it's fear. If something has a chart, it's going to be ruled by human emotion. There's no doubt about it. So you can chart anything. I always like things with volume because then it's more than just one or two participants causing an adverse reaction in a chart. But cryptocurrency, most of them have tons of volume.
Yeah, that's it. It's price action, and that's what it's all about. Fundamentals, this, that, and the other. It's all reflected in the price, right?
Absolutely.
Yeah, cool. Well, Gareth, thanks again. I enjoyed catching up with you, and maybe the next couple of weeks we'll have even more to talk about.
Yeah, for sure. We'll definitely get back together, and I look forward to having another discussion.
Yeah, we'll talk to you soon.